Welcome students to our online class of elements of bookkeeping and accountancy. As you know that we have covered our chapter 1 and 2 in these weeks. So today we are going to start our new chapter 3, depreciation. And if you have any query, I will clear in the upcoming of revision weeks. So first of all, we will do the glossary of depreciation. So the first word is depreciation. So fall in the value and utility of such assets due to their constant use and expiry of time is termed as depreciation. So depreciation means when the value of an asset is going to decrease due to its real wear and tear. So the next glossary word is straight line method. So the depreciation is charged at a fixed percentage on the original cost of the asset. Then the third one is written down value method. As the value of assets goes on diminishing every year after year, the amount of depreciation charged every year also goes on decline. Means in this, the depreciation is charged on the diminishing value or the decreased value of the fixed asset. So now we will move to the definition of depreciation. According to R. and Carter, depreciation is gradual and permanent decrease in the value of assets from any cause. So it generally means when the value of your fixed asset is going to decrease due to its real use, which we can say the constant use or regular wear and tear of the fixed asset, that is termed as depreciation. So the features of depreciations are as follow. First one, the decline in the value of fixed assets. So one assets will be out of it, that is land, because the value of land is always appreciated, it is not declined. The second point, once the value of an asset is reduced due to depreciation, it cannot be restored to its original cost. So once the value of your asset is reduced, now its value can't be come back to that original cost. Suppose you have purchased a car and its value at that time is 7 lakh, and after next year the value of that is depreciated and it is decreases to rupees 6 lakh. So now the value will not increased or can't be restored back to that rupees 7 lakh. Now the value of that assets will be 7 lakh. So the third point, it is a gradual and continuing process because the value of assets will decline either by their constant use or due to expiry of time. So value is always depreciated if you are using that machinery or that fixed asset for the regular part of time, or if the time of that particular fixed asset is expired. The next, it is not the process of valuation but process of allocation of the cost to its effective span of life. So the next and the last point, it decreases only the book value of the asset, not the market value. So it decreases the book value, not the value which you are going to offer in the market. The causes of depreciation. Due to the constant use of fixed assets in business operations, wear and tear arises in them, which result in reduction of their value. So it really says that when you are going to use those assets on the regular basis, then they are going to be declined and the value is going to fall for that next coming periods. The next one is by expiry of time. So the value of maturity of asset decreases with the passage of time, even if they are not being put to use in the business, whether you are using that machinery or not, but you have purchased, if the period has been expired, then the value of that machinery is going to be expired. So the natural forces such as rain, wind, etc. contribute to the depreciation of their value. The next point, by expiry of legal rights. There are certain assets which have a definite span of life, like lease. For example, if a lease has been obtained for 20 years for rupees 5 lakh, it will lose 1/20th of its amount, like 25,000 of its value each year, whether utilized or not, so that at the end of 20th year its value is reduced to 0 by accident. Sometime machine may be destroyed due to fire, earthquake, flood, etc., or which may be damaged due to accident. So these are the causes which are going to affect the value of your asset. The next, by permanent fall in the market value. Yes, the most important, though fluctuation in market of fixed assets are not recorded, because such assets are sometimes the fall in the value of certain fixed asset is treated as depreciation. For example, permanent fall in the value of investments. These are few causes of depreciation which arises the depreciation of the fixed assets. Now, need and importance of depreciation. First one, for measuring the true profit or loss. If you want to measure the true profit of the business, it can be determined only when all cost incurred for the purpose of earning revenues has been debited to profit and loss account. Means if you are going to charge the depreciation on your account, then only it is going to be measured. For showing fair and true view of financial position, if the depreciation is not charged, the assets will be shown in the balance sheet at an amount which is in excess of its true value. And after that, if the depreciation is charged, assets will be shown in the balance sheet after deducting that depreciation to determine the accurate cost of production. As depreciation is also an item of expense, the correct cost of production cannot be calculated unless it is also taken into account. So these are the points which we have discussed, which are relative important for depreciation, and I have explained in very easy language, and the language I have given in the PDF file. So today we are taking only topic depreciation, because in our next class we are going to do the methods. There are two methods, straight line and written down value method. As we have discussed in glossary, we will discuss those 2 points briefly with their accounting treatment in the balance sheet or in the accounts of depreciation or the fixed assets. So I have given the assignment. You have to go through the PDF file and do the assignment as given below. Go very carefully, make your notes and question bank from these notes. So please go through the causes, importance and features of depreciation very carefully, because it is going to help you in the accounting treatment of the accounts which we will prepare in our later classes of depreciation and of those fixed assets account. Hope what I have explained you will listen it to carefully and revise your all work. All the best. Bye.